Hi and welcome to the Trading Bell. We're here at Absa headquarters and we want to speak to Elizabeth Irungu, who is the head of Absa Asset Management, to understand how they're navigating these particular times and what are they doing to ensure that you don't lose any of your coin that you have invested with them. But first, before we get into the conversation, let's take a look at her profile, then get started. Elizabeth is a trained economist and seasoned fund manager with over 17 years investment management and leadership experience. She is the Chief Executive Officer of Absa Asset Management Ltd, a leading fund manager affiliated to Absa Group plc, which is listed in the Nairobi Securities Exchange. Prior to joining Absa, she was the General Manager, Business Development and Client Relations at ICA Lion Asset Management Ltd until August 2022. She has previously worked in the investment management industry as a Chief Investment Officer and Portfolio Manager, handling portfolios in excess of $1 billion USD. She started as an economist in the Office of the President before transitioning to an analyst with the African Alliance Investment Bank. Elizabeth holds a master's degree in economics from the University of Nairobi and is a chartered financial analyst. She is also a certified productivity and engagement coach by International Coaching Federation. She's passionate about financial markets, economics, investments, tech wealth, and enjoys writing articles and training in these areas. Elizabeth, welcome to the show.
Thank you very much.
Great. I'm sure first our viewers would want to know, what does Absa Asset Management have in its portfolio? Would you kindly care to introduce that for our viewers first?
All right. Yeah. Thank you very much. I think as a way of introduction, asset management or fund management services is solutioning clients around their investments professionally. So we give professional fund management services, whether to an individual, to a corporate, to an NGO, to a church, anybody who has money and would like to invest in the capital markets, we are the go-to person. So here at Absa Asset Management, we say that we are a multi-asset manager. What that means is that we are not specialized in any one particular asset class. We cover a wide range of asset classes and give you returns based on those asset classes that you choose. So case in point, we will give you solutions in the unit trust funds, which you know, collective investment schemes. And these are regulated capital markets products which pull money together from different people and then invest in a certain style. So you find in our suite of unit trust funds, we do have the low risk funds, which are called money market funds, either in dollar or in shilling. And you'll also get the long-term funds which give you capital growth, like equity fund. So you have investors who are looking to invest in listed equities, but they don't know which securities to choose. We pull that money together. We do the research as a fund manager. We invest in a portfolio and they wait back and get the returns. So really, really amazing. And then the other product that you find under the unit trust funds is fixed income funds, and you'll also find balanced funds. So all these will have different styles just to meet the different objectives that the investors have. On top of that, as a fund manager, we also do bespoke portfolios. Bespoke portfolios is what most people will call wealth management, where we speak one-on-one with you and we understand your profile as an investor, and we give you solutions that are tailor-made for you. Case in point, we can buy for you an offshore security or product, a structured note maybe, and give you exposure, say, to the developed markets, to the emerging markets, and things like that. Also, in the same breadth of the wealth management, we can also buy for you either Euro bonds, or we can buy for you government bonds locally, and all those will be bespoke because they are tailor-made for you. You're not buying in a pool. Now, these are individuals, high net worth, ordinary mwananchi, all those ones are dealing. The unit trust and the wealth management will cover individuals mostly. Now, institutions also are part of our solutioning. So for institutions, we are aware that we have the big institutions, we have the SMEs, and we need to cater for them. So we have solutions that are tailor-made for them, either in the, for their own balance sheet management or pension, because we are also a pension manager. Now for pension, we do give solutions to large institutions that have occupational schemes that are...
And that has to be regulated as well?
It is regulated by RBA. Okay. So we do give fund management services for regulated pension schemes, occupational schemes, but But on top of that, something else we have embraced as a fund manager is the new reforms that are happening in the NSSF through the NSSF Act of 2013, where all of us now, those who are employed, we are required to contribute to NSSF, and for that matter, 6% by employees, 6% by employer. Now, we realized that there was a gap for the SMEs who could not form their own schemes, and so the default was just to go to the NSSF fund. But if you read the regulations, they do allow employers to actually contract out Tier 2 contributions of their pension. So we do offer that in an umbrella format. So as an SME, as a corporate who does not want to hustle around the running around of a pension scheme, we have a solution for them, which you say it is an umbrella. Sponsors or employers join, and we give you that pension solution, and you contract out. So we are wide, we give a lot, and we are still growing.
Excellent. And that's quite a variety of products that you have there. In fact, you mentioned a few things, and I was just curious to know a few things. One, I know that wealth management, I've spoken to several bank heads and CEOs, and wealth management is fairly a new product that came up. I'm sure for you, I think it's about 2 years or so of doing this.
Yes, it is.
And I'm seeing how it has diversified the incomes of banks as well, and people are really embracing them. I don't know, what has been your perspective? How's the reception like?
The reception has been quite good. You know why we love the wealth management proposition is because we also recognize that people who come to bank, they come with other needs. They just don't need only banking. They do require other investment. They want to grow their wealth. So for us at Absa, we are saying we want to solution the client in the banking hall holistically. We want to take care of your retirement. We want to take care of your emergency fund. We want to take care of your income streams, maybe for your business. And we also want to take care of you when it comes to protecting that wealth. That's why we have even bank assurance within the bank. So basically, these solutions for wealth management, because it encompasses investments, insurance, and banking, we're saying we are giving you a holistic solution as a customer when you walk to Absa, whether you're an individual or a corporate.
Okay, excellent. Let's talk to matters accessibility and affordability. And first of all, I know I'm about to ask you that question about your unique proposition, but let's talk first of all about how accessible your portfolio is to your clients, and how you've made sure that at least you are at the forefront for them to just choose you.
Excellent. So one of the things you'll appreciate about investments, especially for individuals, is it's been positioned almost like a preserve for the wealthy. So what we have tried to do is to say that wealth management, investments is actually for each and every one of you. So we have solutions that are targeting even the low, what people say, the bottom of the pyramid, where people are saying, I don't have a lot, but I want to start. Because for us, we want to promote the consistency in saving and investing. So we do have, for example, the unit trust products, which I was talking about, that admit or allow you to invest with us with as little as 1,000 shillings. And you've got 84 branches where you can get a touch point, physical touch point. Previously, again, you will notice that fund management was a preserve for Nairobians, because that is where every fund manager is located. So with a bank coming on board and opening and themselves to solutioning you at the banking hall, we are saying for that person who is up country, walk to any branch, get information, because we've trained these people very, very well to give you full information and be able to understand what you're getting into before onboarding. So we have products which are very low. And to the whole spectrum, I can say we've catered for everybody. To the wealth management or advisory services, we allow people with as little as 1 million shillings, not just the ultra high net worth, the billionaires. We allow as little as 1 million shillings. You can actually buy a product that speaks to you. So we are very democratic. That's what I would say, in our way of embracing everybody in the investment journey and showing them how to get to the next phase of their life.
I want to dig deeper into that because maybe some viewers here are the guys who have, some 1,000-2,000 to spare here and there.
Yeah.
And just to really speak on the, financial affordability for them to really get into some of these instruments that you have. Of course, we have the high net worth, but we also have these guys who
ordinary.
I can get my 1,000 maybe in a week or something.
Absolutely.
Like that. So what products are there that you have
for the ordinary?
Yes.
We have the pooled funds, which we call collective investment schemes.
Okay.
Specifically, I always like to advise that for most of us who are starting our investment journeys, we try with what is least risky. And the reason I say that is because we have emotional attachment to how we are treated by an investment. So when you're starting, I say start with a money market fund, a really simple and low risk kind of portfolio that allows your money to generate a return and at the same time allows you to maintain or preserve the initial capital that you come with. So we are saying as an investment manager, we work very hard. When you bring a 1,000 shillings, we maintain it at least at 1,000 shillings, but on top of that, we give you a return. So that means your money is beating inflation, because that is what everybody wants to beat. You want your money to be growing at a rate faster than the inflation. So money market fund are a very good place to start. It teaches you the discipline of putting money aside every time without disappointing and letting your heart go into palpitations. Because there's some investment, for example, equity funds. I could tell you that also 1,000 shillings, but we don't recommend that as a starting point for beginners. Reason being, shares really moving up and down, but we work very hard to train, to educate, to empower, so that we transition you from where you started, the baby steps, you move maybe next to a fixed income fund, next you move to an equity fund, and you'll find yourself actually loving that journey. Otherwise, if we just promise you high returns, we may shatter your heart forever. So for us, it's about working with you.
Oh, you're right. There must be a place to start.
Yes.
Speaking about returns, I have seen some wealth managers out there. We may not mention names.
Of course.
But I've seen some returns and that take you back. You're like, wow, okay, how did you get all this? And then we have reputable institutions that have done this for years. And you see they relatively are at a certain average. What are some of the red flags, especially for someone, because we are easily just attracted to, wow, these are the numbers, I just jump in. I'm sure being in the field for quite some time, you have seen some of the red flags, and we have had stories out there, some in our news channels, where people have come out there complaining. What would you say on a general note of advisory for anyone who is considering to jump into this?
Excellent. Now, every time a manager or whoever it is tells you that they are going to invest, what you need always to cast is a shadow of risk. So investment, returns, then risk is a shadow of that, because risk never comes to the forefront. Like you've said, you've seen returns, but you have never seen anybody report risk. They report only returns, because that's what we see. That's the fruit that we see when we invest. But accompanying that return is risk. So the best and the most, the fundamental, like rule of the thumb, always investors should always remember, a high return is always accompanied by high risk. High return, high risk. Low return, lower risk. It's not very direct, but you still need to dig deep, but that is a fundamental rule when it comes to investing. Now, when you look at the markets and you see different fund managers are publishing different returns, some at the very top, others at the bottom, or things like that, that just gives you the risk profiling that each manager is taking. Our difference, assuming that all of us are investing in 254 Kenya, then we are seeing that we have taken different risk parameters and chosen our investments with different risk profiles. So the higher the return, you might see those guys with a higher return, without interrogating, I would say maybe they have a little higher risk. So I need to ask them a question. What exactly are you investing in, to be able to decipher what risks are they taking? Maybe are they taking more risk than the manager who is at the middle, at the median, or the manager who is at the bottom? So that's the kind of profiling, but you need to do more due diligence. It's not naked eye.
I love that. I have to still dig a bit more on that, because some of the terms you've used there are things that people need to think about.
Absolutely.
And you talked about risk. And I've heard of terms like risk profile. People need to evaluate themselves to see their risk. And I've also heard you sometimes speak about that this risk changes with the ages of persons.
Yeah.
Do you want to help someone out there?
That's a very good question.
Yeah.
So when it comes to our ages, we talk about life stage investing. Life stage investing, we basically look at people on their ages. Yeah. So we look at the person between, let's say, after college. That is when you start earning. After college, you start earning. So we say 24, 25, that is your early career stage. You move all the way to mid-career. To around 45, you're entering your late stage of career. Now that stage is very critical. At the beginning, when you're at the early stage of your career, you don't have high income, most likely. But you have potential that if you perform very well, your incomes are gonna shoot. So the graph would be looking up. So it's a very nice stage to be at, but that's the time when you don't have a lot. So what do you need to do there is different from the person who is at the mid-career, where maybe they have topped, they're now a manager, a general manager, something, they have more income. So you realize that the person who is at early career, either they're forming a family, that's when they're getting married, that's when they're thinking about their first house, so they have more things that they need to do. So the most likely are going to be taking a bit of loans. So how would they invest? So we assess your income, we assess where you are at in your career, and we tell you, all right, for us to grow, we need first of all to take care of your emergencies, because you may have emergencies that will come and you don't have enough cash. So you need to really keep a good buffer of emergency fund. And at the same time, we will also ask you to take a mortgage. Just start thinking about a mortgage when you're younger, so that as your incomes rise and you get older, you can clear out your mortgage and you're becoming even more stable, because you're not going to be struggling with payment of, rent. Then you move to the mid-career guy who is in the 30s to 45 levels. They need to really scale up and speed up. They need insurance for their children. They need to scale up, for example, in terms of building buffers around high-yielding kind of investments. So we can recommend at this point, buy a high-yielding bond or buy some equities and things like that. Even the younger person will buy equities, but not the same amount. If a younger person is buying equities, I'll tell them, buy equities in your portfolio, maybe start at 30% or 40%. Then when you're mid, we'll take you all the way to 60% maybe equities or things like that. Ideally, we don't live in that idea. So the mid-career guy needs to be accelerating their wealth and making sure that they're building strong buffers for investment, even as they earn their high incomes. Then you get to the late stage and retirement, we need to be more conservative, because we are saying you're approaching the tail end of your career. Most likely now you'll move out of your nice corner office. We need to invest with a mindset that you want to replace your income when you're retired. So property, real estate, we might want, just before you exit the scene, we tell you, if you had properties, all plots and everything, can we turn them into cash? Because you need cash so that you still So every stage, different investment styles, but it really, really is particular to every individual, because we can start at different times.
As you normally put it, any investment has its own risks as well. And I'm sure for you, you're investing on behalf of very many other people.
Absolutely.
You have you're not, prone to not face the same headwinds like anybody else. I want to know from your end, because every single day you have so many lives that you're holding and investing for. What keeps you awake so that at least you can make a return for them? What are these challenges that you're facing and you have to constantly know that you need to navigate them, especially on the macro skills?
Thank you. And there's something that Warren Buffett said. That actually, is it Warren Buffett or somebody else? It's Warren Buffett who said that if you don't know the risk, then you need to be very careful how you're investing. You need to be knowing that your biggest problem is when you don't know the risk, what you're trying to navigate. I think what keeps a fund manager awake is the risks that we have to cross. You know, like you're on this side of the bank, the river bank, and you have to jump on this side, and there are crocodiles here, and you're telling people, I'll take you here, I'll give you a return, you know, and you make sure you don't fall into the crocodile, infested river. So that's what you need to manage, this part where you've got to jump guys to the other side. And you come to managers and the problem is heaven. So our work mainly as an investment manager is actually not to manage the returns, is to make sure that we manage the risks so capably that we do not aid you in a tragic situation, because nobody wants to end up in that tragedy. Absolutely. So how do we deal with risk? Well, there are many ways of dealing with risk. Obviously, you can avoid risk, and that means you'll never move anywhere. We don't always avoid risk, but we manage it. And we manage it in several strategies. One is making sure that we are diversified. So if, for example, you're coming into a portfolio, you'll find that we are diversified in terms of the asset classes. We are diversified in terms of the even the securities. So even like, let's say it is equities, we can say we are in the NSE, but are we diversified across all the different sectors that we have there? So that diversification, we can diversify also across geographies. We are not restricted to Kenya alone, so I can diversify across geographies. So I say Kenya is my hub, but can I take some little money maybe to a developed market? And that gives me diversification, and I can diversify on currency. Maybe this currency is doing better, or I expect it to do better, or something like that. I diversify on currency. So geography, asset classes, and things like that, diversification. That reduces my risks and means that if one asset class is not performing, another one might be performing. So I get a balance. So I get really good balance. Maybe today money markets are earning lower, but equities are performing well. That balance becomes really nice. So I'm not yo-yoing too much. I'm very balanced. The other way of dealing with risk is obviously to do good research. If you don't deploy research, you'll only be reading what is in media. And we know media sometimes is not always 100% everything that you read is true. So we do a lot of research at the back end. We have tools that we're using to do our research, to validate. We visit companies to validate information, and then we build models that will try and predict the performance of these companies. Because again, in investment, you're investing in the future of these businesses, whether it is a share, whether it is a fixed income debt, things like that. So we employ many strategies to help us decipher risk, and where we need to run away from the risk, we get out quickly. We see it early. We want to see risk early and get out of it. We want to also take calculated risk, not like speculative. We can't be speculative when we are managers.
Absolutely.
We are fundamentally driven managers.
I want to be very fair to you as the head of Absa Asset Management and ask you, what's your competitive advantage? I know it's a very straightforward question, but I want you to add a few things on it. One, because you're not unique and you've faced similar headwinds like any other fund managers and even your customers as well. Inflation has hit them. We've had things that we've seen in the currency. We don't even know what's going down there. Interest rates have gone up as well. And I'm actually curious for you, because you're supposed to invest where your customers can get as much. When interest rates go up, definitely has an effect on what you're giving them as a return. So your competitive advantage and what you're dealing with, these particular specific areas maybe that I've mentioned.
So yes, so when you talk about market risks, those ones face everybody. All of us are facing the same inflation, the same high interest rate environment. Almost, those are macros that all of us face. But what makes a manager different is how they structure their portfolios. Because we are here to construct, rebalance, and research on our portfolios. So we do a lot of analysis. We've employed highly capable teams that will do the research so that we select the right assets, especially in distressed situations like where we are in. You need to select your securities very well. So we pride ourselves the fact that we have the people, the tools, and a big group that has African footprint and understands the African markets, so that when we combine that knowledge, we end up with a unique proposition for our clients, and we ensure that we avoid the pitfalls that could come when you are investing. So that's one unique proposition of our. Then the other thing is that we are able to bring bespoke solutions from other markets. Case in point, I think we are 2 in this country who are offering structured notes. These are not available in the local market, but you'll be able to buy structured notes that are benchmarked on the international indices and give you exceptional returns in times of volatility. So that's another good thing. And the third thing is, obviously, like I said, fund management has been a preserve for Nairobians. We are saying all our branches, we've trained, we've empowered. You can be able to sit down with somebody and give you a conversation around investments. That doesn't happen every day. That doesn't happen in every bank. So we are very proud to say our teams are well trained, they are available, and you can be able to get very good solutions from them. The same case with our RMs, and I think we've partnered with NSC on our relationship managers getting certifications, global certifications like CC, so that when they interact with our clients, they're interacting with from a point of vantage, then vantage in terms of knowledge, that they are knowledgeable enough, they can decipher what is happening in other markets and in the local markets and advise you without bias. So we do a lot. So that's our differentiator. Thank
you so much for your time, but I want to give you a last word to your customers who have already invested with you. What assurances you have of them, because we have seen a lot of what is happening around just the global economies and the macros and all that. And of course, to anyone who will be thinking, maybe I should consider joining in. So what is your last word to them?
All right, and great. To those who have already invested, and to those who are already Absa clients, because they are, I would say, when you go to your bank or when you meet your relationship manager, be sure to talk about investments. Don't restrict yourself to only banking. Let's expand the conversation. So my call to action is expand the conversations to investments, whether for your own, whether for your child, whether for your relative. That's for those who are Absa clients. Those who are already in the investment space. My word is, yes, we are going through turmoil. We are working very hard to make sure that we protect and we grow your wealth in a very fashionable way without taking excessive risk. And of course, trying to understand the market as it is evolving, because this is a live market where news is evolving every now and then, news that impact how we are investing, but we have the resource and the capability to do that. To those who are not investing with us, this is to tell you you're missing out and to welcome you on board, and reach us in any of our branches, or even drop us an email, and we'll be able to solution you. We know that we have a solution for each one of you, and I know that the future is brighter than it is. So our setbacks for today, they're our comebacks.
Wow. Thank you so much, Elizabeth, for your time.
Most welcome.
Setbacks are also comebacks. So very optimistic. Elizabeth Irungu, head Absa Asset Management, saying, you know what, if you're not there, then you're missing out. That's it, right here on the Trading Bell Show on Matters Wealth Management. I leave you now with the markets.